Welcome, everybody, to another episode of the AgView Pitch. We are heading into another marketing week. It's the second week of July, July 8th through the 12th, and we are lucky enough to have with us today again Mark Welch at Texas A&M, market specialist, and the director of TEPAP. And Mark, I want to start there. We're going to talk markets here in a second, but the registration is now open for TEPAP. Is that right?
That is correct, Chris. Good to be with you today, and always enjoy our chances to visit the conversation, and particularly as we've opened up registration, as you mentioned, for the Executive Program for Agricultural Producers. TEPAP is the acronym that we are known by. If you're interested in that program, that's an easy website to find, TEPAP. And if you need to add a TAMU for Texas A&M University on the tail of it, it'll take you right there. What we've tried to develop over the years, and this program began back in the early 1990s, Danny Kleinfelter, finance professor here at A&M, and with a broad range of experience in agriculture and agribusiness and agri-finance, developed a program to help farmers be more professional at what we do. Many times we've grown up on these places and maybe understand the production side of it pretty well, but have we grown in our professional acumen and skills and resources to perhaps give us that competitive edge, that key to being profitable, sustainable over time, and that's why we get together each year for TEPAP, and certainly encourage folks to check us out if it would be a fit and make a difference in your operation, because we think that is such a key to providing again a sustainable, successful future for many of our farms and ranches.
I think I've told you before that when we're working with a client for the first time, I can almost tell if they've been through TEPAP or not. I swear that, there's just a little edge that they've got in how they think and how they look at the business and kind of where they're at and what the strategies are, what the next steps are. And so, I really appreciate that. Can you share with us the dates of that so people can make sure they mark their calendar as well?
You bet. Yeah, we typically hold TEPAP that first full week of January. So you just complete the your holiday get-togethers and festivities, and then the calendar rolls around to that first Sunday in January. So we hold that program. It's a week-long program. We'll be meeting on Sunday, January the 5th through Saturday, January the 11th. So we'll meet that full week. It's a full week of content, of information. But as you just mentioned, Chris, the impact that you can tell if somebody's been to TEPAP or not, that opportunity to share, be in a room and be around people from all over the country and even some international participants that to exchange ideas, to discuss challenges and issues. For many of our producers, they find that they can be open and have these conversations with persons that they can't in their home communities. Many times with other pressures and perspectives, that it's just nice to get away and be able then to build those relationships and to have those opportunities to discuss these issues in a way and in a place that it really allows for some honesty. It allows for some freedom in exchange of ideas, and then what grows and comes from that. It's exciting to see, and over the history of TEPAP, exactly see that kind of impact and difference. That they're not the same operation now as they were prior to that TEPAP experience.
Mm-hmm. Yeah, it's a information through a fire hose, but you can take home so many activities and things. And I know a lot of people go home with a big long list. The key is to take that list and to prioritize maybe those top 2 or 3 things and take action, and the accountability of some of those relationships that you build. You can maybe connect with those people and hold somebody accountable, and maybe somebody hold you accountable. And I think that's really a great opportunity. And I appreciate you sharing that. And people just need to go on, like you said, on the TEPAP on the website there and consider getting signed up, because it's definitely a huge, great opportunity to improve your business and change. And I think it changes the bottom line for businesses too. I think the return is a significant. You look at the investment, and to me, the investment is it generates a significant amount of return over the course of the years after the first and the second units are completed. So anything else? And then we're going to talk markets here. Are you good?
You bet. And again, if you go to that website, all our contact information is there. Be glad to answer any questions, concerns people might have. Is TPAP right for me? Is now the time, for us to attend? Who should go? Who's the kind of program aimed towards? Be glad to have those conversations with folks. So any questions at all, we'd
Awesome.
really love to have those conversations.
That sounds great. So, well, with that said, now that was the good news. Now we're going to talk markets a little bit, and we've been under some pressure here, Mark. I think there's these areas where there's been a tremendous amount of water, and we talked before we started recording. Instead of getting an inch at a time, they've been getting 10 inches at a time in some of these pockets. It's not a super narrow sliver, but it is a sliver across a portion of the Corn Belt, and then when you look at some of these other areas, the crop looks pretty amazing. I mean, we got a ways to go yet. We're in the middle of July. We got to get through August. We got to get through probably the first part of September, because a lot of this crop was planted a little later because of the spring being kind of stretched out in a lot of areas. And there's some dry pockets too, but the market doesn't seem to really give a crap right now, to put it nicely. And we come off, a couple of weeks after a USDA report that wasn't super friendly necessarily. I'm gonna start there and have you give your 2 cents on kind of what that said now that the dust has settled, and where we're at, and any perspective you have there. And I got a few more specific questions for you after that.
Yeah, you bet. We were heading into this crop year kind of knowing where our real risk price wise and challenges were going to be. In that, if you look at some of our, if you kind of break that balance sheet into your supply and demand categories, and starting on the demand side first, we knew we had some challenges there. We have significant, of course, export competition. So that, what's Brazil going to do primarily? Where's China going to buy? Those kind of questions. Then you look at our major, talking about corn, use categories being feed and fuel. How are those going to shape up heading into this crop year? We knew that on the feed side, we're going to have some growth maybe in some of our livestock sectors. Poultry may have a little growth, but we still have some disease issues there. Pork, perhaps some room to expand. But we've got, the beef cows numbers continue to go lower and lower. We got the same cow herd now, beef cow inventory we had is 1961. We still don't have the factory generating the calves. And so what does that look on the feed use side? How long can we sustain, these cattle and feed numbers? So a lot of growth just from the grain consuming animal units that are going to be out there. When you look at fuel use, gasoline consumption not forecast to come back to pre-COVID levels, with energy efficiency that we have in a internal combustion engine today, as well as more EVs, electric vehicles that don't use gasoline at all. What's the growth prospects on the ethanol side, short of perhaps the aviation fuel sector and maybe some opportunities there, but in the short term, some real challenges on the demand side, such that if we were shaped up that if we make a crop this year, the prospects that we're going to increase supply significant relative to what we could increase use. And that's what seems to be unfolding. Even cutting back acres compared to a year ago, if we hit a trend line yield of 181 bushels per acre, which that probably looks pretty doable, at where we stand right now in the growing season, we can give up some acres and still have corn to spare at the end of a year when we have some headwinds on the consumption side of that balance sheet. And so as we're laying out this year, so we get an acreage report, we come up with 1.5 million more acres of corn. Mm-hmm. Those crop condition ratings coming out every Monday afternoon, are those indicative of supporting that yield goal, that trend line yield achievement of 180 bushels this year? I think that's the kind of the key for the either a downward momentum in prices or if we're going to turn this thing around based on just what that yield prospect is going to look like. And that's going to unfold with every Monday's crop report and the next week's weather outlook, particularly up in y'all's part of the world, of how that shapes up. But yeah, if we hit a crop, and given what's happening on the demand side right now, and if Brazil makes a crop and our foreign competition stays strong, yeah, this is kind of what that price response ought to be. When you see supply increasing faster than use, it doesn't take a PhD in economics to kind of figure out what the price impact of that's going to look like.
So, I guess one of the questions I have is for you is, the way the crop looks in a lot of areas, and I think the way it doesn't look in some areas, I think backyarditis sets in when we're having a difficult time. The voices are typically the loudest where it's the worst. And if somebody's sitting on something good, we don't say too much.
Right.
But we're so focused on, it seems like so focused on production that really the part of the equation that seems like that's missing is the demand side. And I want to just kind of ask you there, I mean, how much demand would pull us a little bit up out of this? Because we got the funds working against us, so to speak, at least for now, while we are apparently sitting on a bunch of old crop inventory yet, both in corn especially and soybeans to an extent. Talk a little bit about that. I mean, what demand picture? I mean, if China would happen to step in, I mean, what's it going to take on the demand side? I mean, because it seems like when you go low enough, you start to create demand, but it takes a while.
Sure. And of course, breaking that into sectors of demand, we think of our basic food categories. Probably not a lot of variation there, but so much of our grain demand components are in fuel and feed, and those, of course, much more responsive, I think, to more of the the economic factors.
Right.
It's interesting to note that if coming into this post-COVID period, so I'm thinking 2019, 2020, if you look at our economic growth projections globally, and then even more specifically, look at those growth projections for the emerging and developing economies of the world. So we can break our economic growth into three sections. You've got the world total, and then the advanced economies and the emerging and developing economies. And the growth patterns are very similar, but yet they're higher generally in those emerging economies. And when those areas of the world are growing faster than the rest of the world, that's good for us in agriculture. That's driving those basic components of feed and food and fuel and throwing fiber. That's good for what we do. Beginning at about 1999, 2000, that growth in those economies grew much, much faster for 20 years than the rest of the world. They were growing at rates significantly higher than the advanced economies of the world. And we saw world per capita grain consumption increasing steadily over that period of time, much faster than just what's going to grow because there's more of us. Per capita consumption was growing at about 1% per year. So population expanding by 1%. And then on top of that, per capita consumption is expanding by about 1%. That was driving a demand base for grain for 20 years. Coming out of COVID, those growth projections are about half of what they were back in that 20-year period from 2000 to 2019. So we're just slowing down that engine of consumption. So it doesn't mean it's going away. But will we see other propellants into the economy that would spur that kind of underlying, it's a demand driver across a broad base of commodities? One of our speakers at TEPAP in our macroeconomic session, Dr. Ed Seafried, talks about GDP is a very important number for farmers to pay attention to. And many times we think in farming, we're kind of maybe immune or not really driven by much of those broad economic indicators like that. But he points at GDP. That's the buying power of your customer. Mm-hmm. And whether it's US GDP or global GDP, which matters a lot more for a U.S. farmer, those numbers matter. And so we're in a period now of GDP growth that's it's not negative, but it's not robust, and that's on purpose. Central banks around the world are trying to slow down economies to get prices under control, and we've kind of got we're kind of got our foot on the brake of economic growth and economic drivers right now, and that has an impact on the grain sector specifically in terms of that underlying tone of demand. And so if we talk about building that base and kind of maybe releasing some of that potential, it's tied directly to those global economic drivers. And so we're in a period now of slower growth, and that creates some challenges on the demand side, such that, again, if we hit a crop at a time at which our demand is facing headwinds because of these economic challenges, we see these surpluses. Now, we do know all it takes is one short crop, one production issue in a major growing area. This thing turns around really, really fast. And the markets react very, very quickly. But at this point, if it looks like everything, we're kind of going to make it this time, it puts some really, that significant downward pressure on prices, which is so important then to monitor what our costs of productions are, such that when we see those marketing opportunities, when we've got that chance to do something, to lock something in at a price that works, and that price that works is going to be different for every one of us. You have to know what that was for you, but to not let those opportunities get away, particularly when that overall environment, the kind of the big picture is that, if we make a crop this time, this price deal could get pretty tough. And that's kind of what's unfolding at this point in this 2024 growing season.
So that's one of the things we work really hard with our clients on is, knowing your cost of production, having those numbers dialed in really close. And I think with Profit Manager, I think we do a great job of knowing those numbers. And one of the observations I would say is that in the month of May, when we had that rally, to your point, I think there was a lot of very diligent decision making where people put targets in. In other words, they put targets in that, we saw targets starting in that 480 range all the way up to, 5.25 or some all the way up into that 540 range, I guess, the hopefuls, and then everything in between. And we got to 496 3/4, and let's use corn as an example. And I don't know where beans were at, but beans just missed the nick for a lot of people. In other words, I think there were some targets hit in that 492 to 496 range, but I think there was a significant amount of targets in place, offers in place that just never got hit. So consequently, when we look at our clients are currently in that 22-23% sold on new crop corn, soybeans, similar numbers. Very difficult question here, and you don't have to answer it necessarily, but it's like, how do these guys, swallow this? Because, we're going to have to maybe recalibrate what levels we can sell at, and they're probably not profitable because our average cost of production for our current client as of right this minute on Profit Manager for corn is $4.99. And and again, that is covering paying themselves, paying their employees, all their overhead costs, all the, paying electric bills, all that stuff. That's, so if you take all that out of it, that takes about it's actually $103 an acre off the cost. But last time I checked, I think farmers want to be paid, for what you do. It's nice to at least pay yourself something. And so when we look at that, do you think there's much hope? Because, the USDA is talking that 440 kind of average, and then you take basis off of that. If in fact we have a big yield, at what levels in some sort of, technical perspective, do you have any targets, any thoughts, any ideas where, even if you're selling below the cost of production, you might be selling below the cost of production at less of a loss than if you wait for 370 corn? Not to say that predicting any numbers, but, managing that. Any comments on just kind of navigating, less loss? I mean, I'm just being really frank there, because I think, we like to talk about selling at a profit, but on the same token, there's a lot of years over all of the 27 years I've looked at cost production. There's a number of those years in there where you just don't make any money. You
Right.
try to lose less. Any comments on
Right.
that? It's a sad
Right.
way to say it, but you know,
Mhm.
reality hits sometimes too.
Right. Right. And you're right. It's kind of nice to have a little compensation for your time and management and trouble. You know, as I heard one producer say, I've about all had all the character building I could stand. I need a little make a little money doing this. Uh,
Mhm.
and I think
And you
this is
don't need to
a year
practice,
that's
you know.
um, it's a good example of evaluating how we approach our marketing plans and marketing targets. Um, are we such that we would be inclined to sell into a market on the way up, in that recognizing for the targets that we're setting along the way, or we know we're not going to hit the high of the market because we're going to sell into that market, or if you want to wait until see that if it shows some kind of topping action, that's fine too. But are you going to sell it on the way back down? And of course, many times what we find is we wait and wait and wait to watch it go up, and then as it comes down the other way, we don't do anything then either.
Mhm.
I wish I had a way to test this or measure this. I think in so many cases, farmers we're more afraid of high prices than we are low prices.
Mhm.
We're so afraid of missing the very, very top that we don't do anything to pick up protection against the very, very bottom, or prices falling the other way. And so we're willing to take that downside risk rather than be that guy that missed out on that 550 corn this year because I sold everything at 5, and rather than now we see corn at 4, and instead of wishing we had got something done. So it's a challenge and it's hard. Uh, and certainly looking at, okay, now we've had this big setback. What again, kind of we started our conversation about the markets. What's predicated that setback? And when we've seen price patterns do this in the past, kind of what sustained that price either downward trend or turned it around, I think it is right now really hinges on those crop condition ratings. What's that yield potential is going to be? If we want to put a rally in this market, if USDA were to start trimming that yield number by 1 or 2 bushels per acre, I think that would have a significant it reset those balance sheets because things we have some carryover in the market, but it's not huge, but certainly it's comfortable at this point. Uh, the chart that I've been patterning this year's price action around, look at the 2014 December corn chart. And this year lines up just almost right on what happened in 2014. It's particularly in that we hit the high of that market in April and May. We don't usually hit them in April and May. It's usually late June
Mhm.
before we hit the top of the market. By late June, this thing was done. We're cratering down. In 2014, the share of the corn crop rated good and excellent never dropped below 72%. We had strong crop condition ratings all season long, and we had that big drop in prices and kind of chatter along and hit our normal seasonal low late September, early October, just kind of like we normally do. But it was those crop ratings that drove that yield potential that drove that year. Um, got a little more cushion this year because we got more corn acres, than we thought we were going to have just 10 days ago. But it's still driven by in my mind by that yield potential this year's crop. So if we start seeing some issues, some challenges that support, maybe this yield is not going to be that 180 this time, which 177, 178 is still a great crop, but yet not that bin busting potential. I think that's a key. So what do you do in the meantime? So we've seen this drop. I think this is the time, the challenges, and it's not too late. We're still looking at the cost structure, trying to get that cost of production down, be as efficient as we can with every single penny we spend on that farm. And maybe there are expenditures of things not necessarily related to crop production that are still tied within our operations, other expenses, looking at every equipment purchase, every supportive activity doing our farms, and then really have those conversations of who we sell our grain to, who are our customers, and how we can increase the value of what we are selling them, whether it's quantity or timing or quality, whether it's going to just to your local co-op, to a feed plant, to an ethanol plant. Can you get work on the basis.
Mm.
The futures deal is working against us right now. Futures prices have taken a big drop. Can we do anything at all to help manage that basis? And a nickel or a dime here and there might be that difference of, yeah, it's a tough market situation right now, but you're trying to make that bad situation a little bit better, not make it any worse. Can at least do something on the basis side, have those conversations around ways perhaps to manage that. And then if we do get a bounce or a bump in this market with a little better basis, does that price kind of work? And then looking long term of kind of where these prices may be headed. Again, with your market advisor, technical indicators kind of are great for those kind of things. But again, I think I'm at the point now of managing nickels and dimes in this tight market, of trying just to keep this thing from getting worse.
So you talked about basis, and that was going to be another question I was going to go to here. You guys, in Texas, what are you, a couple of 3 weeks, month away from harvest?
We've got grain coming in.
Okay.
We matured much earlier than normal. If you talk about South Texas, and they had some drought conditions down in that part of the world, and then up around, I think, the coast of Texas as you come up along from South Texas, curl around Corpus Christi and head toward Houston. We got a lot of grain that's being combined right now. So we have grain sorghum coming in, corn being cut, and that'll move up into Central Texas here in just a couple of weeks. So it's grain harvest time right now for many of our
So
Central and South Texas
what are you
producers.
seeing for basis where combines are rolling?
I haven't
Still
heard
a
down
strong
in that.
basis, or?
And generally speaking, our corn basis in Texas has been holding together pretty well. Our primary feed centers where that corn going up in the Panhandle region for our livestock cattle feeding industry, we've still got a pretty good basis up in that part of the world. So we're seeing still some 50 over for corn in that Hereford, Texas, Central Panhandle area, and so a lot of the grain that will come in now, kind of if we don't have that South Texas crop, that basis can really get exciting here about this time of year. But I think we're starting to dampen that basis just a little, but not significantly. Again, Texas is a deficit grain growing state.
Right.
We always import corn from the Midwest. We don't grow enough of our own.
Yeah.
So it's not crushing our basis.
Yeah. The reason I'm asking is because that's kind of a little window into, when the corn belt gets rolling. Currently, right now, we've seen basis get better, and then we've seen it soften, and then we've seen it get better, and it's been directly correlated to what the flat price has done and what the farmer's doing. And the second we get some sort of a rally, there's still just enough old crop here that kind of puts a wet blanket both on old crop and new crop opportunities, because and the funds are well aware of this. I mean, they're playing this game really well, and and so I think until we clean up this 23 crop, we really are probably going to be pretty limited on any upside potential, aren't we? I mean, of any volume anyway.
Yeah, that's really good point, Chris. And everyone, going into this season, again, we kind of think of kind of what the big picture looks like unfolding. I think that was a key point that you just mentioned, that if we do get a rally in these markets, are we going to snuff it out? Because we got a lot of grain to sell.
Yeah.
If there's a lot of unpriced inventory that needs a home, how much of a rally will it take to farmers let loose of that grain? And so that's another piece that's playing into this.
So if farmers are eventually, I explain it this way: there's like a door for that corn to go through, and the basis is calling for it to come through there, and it's gone through in spurts. But at the end, this stuff, I mean, and it's a terrible reason to market because you need the bin, but there's going to be a lot of that, and the door's not going to be big enough. And all of a sudden, it looks to me like basis could really go in the tank for a period of time anyway. And I don't think you want to be the person sitting there holding on to that. But then on the other side of that, once everything is through the door, what do the funds do? Do you think the funds kind of reset themselves? I mean, and get out of these shorts, and then create some opportunities? So this is my last question, but I'm asking, I guess I'm hoping for a counter seasonal rally,
Right.
something that happens during harvest or at some point. What are the odds? What do you, am I just super hopeful here for something, or what's your thoughts?
Right. And Again, I can't begin to explain or maybe even shine too much light on what's driving a hedge manager, hunt fund manager, or speculators in our grain markets, other than if you do look at some patterns and tendencies in those markets. One piece of that I think is interesting that I don't look at every day, I need to pay more attention to, is many times we'll look at the net long or short position of speculators in these markets. And there's different categories of reports that come out every Friday afternoon at 2:30 from the Commodity Futures Trading Commission. Those reports will be actually on Monday the 8th this week because of the July 4th holiday. But are those speculators net long or net short, more so or less? That gives some kind of indication of what their thinking is. What's happening over on the commercial side? If you look at the fund positions held by commercial traders, that's an indicator. If they're not selling contracts, that means farmers aren't selling. Because those commercials, those are your grain elevators. When a farmer contracts grain, they're selling to cover those positions.
Right.
And so a large net short position by commercials means farmers are selling. When the commercials are long or net long, there's no farmer selling. And that would be an indicator that people that actually use grain, that are actually going to buy that product and turn it into something else, if they are net long the market, that's a pretty good indicator that they're seeing this as a buying opportunity. If you go back over the last 5 or 6 years, you'll see many of the bottoms set in these markets associated with those periods of time, which don't happen very often, that the commercials are net long. And so I think that's another kind of a window into our markets. Another piece with that would be just the spreads that are in those contract months. If you're looking at grain that's in the bin, we're going to price that later down the road, particularly we get to harvest and pricing in the spring. You're going to get paid for that storage or not. And if there's a lot of if there's a spread between those futures contracts, and again, if that's a way to pick up a few pennies of a nickel or a dime in that stored grain, go ahead and get paid for that. That's okay. Even though the price outlook is not great, go ahead and lock in that piece of the storage and not let that slip away. But again, there's maybe some keys of when maybe we're kind of pounding at a bottom. Something that could happen here in July and early August, a weather scare right here at a very key point in the growing season would not be unreasonable. But again, being prepared for that with a plan in which what price is going to work. Because we're going to let that, if we get that opportunity and we get that 20 or 10 or 20 cents on the board, are we going to let that one get away too? Are we going to go and capture that and try to build on that? Again, to be prepared for those kind of opportunities. We may not get it. I don't know. But typically there'll be something that'll give us a little spurt in these markets, short covering by the speculators in the market, a weather scare of some sort before this thing is all said and done. But again, to be prepared for those opportunities when they come along and not let something get away.
Yeah. One of the things I like to see our clients do with Profit Manager is to navigate that yield. In other words, not necessarily move it from what their APH level is or what they anticipate on a normal year, unless they've had significant weather issues like some of this region we talked about that gets 10 inches at a time.
Yeah.
They're probably in the insurance indemnity situation as it is now, to where you almost need to be calculating that risk mitigation or that insurance payment as part of per bushel. What is that number? Instead of like, I'm going to get $150 an acre. Well, no, don't take that back per bushel and say, okay, that's 40 cents a bushel to my price. Add that into the selling opportunity when you're making those decisions. So you're not thinking I'm selling for 440. I'm actually selling for 480 because I have, so I think it's important that we make sure we're doing the math kind of from 3 different angles, right? Looking at not just per acre, but per bushel, and looking at, the scenarios and then just keeping that scenario alive. It's kind of an evergreen analysis, right? And looking at, what's my average selling price? If I was 25% sold and I sell another 10%, what's that make the average? Don't look at that low price that you're throwing the towel in on a percentage of it, but you're also protecting, that's your bottom, that's your bottom end, right? Or maybe it's a put strategy, but at least you're segmenting those opportunities in there. any final comments, I guess, on just kind of managing where we're at now? We're kind of back into that, like you said. I love how you said that 2014. I mean, I hope we're not into the 15, 16, 17, 18 either, but
Right.
it could easily be that. I want to leave you with a final word on just things that producers need to be thinking about in the next couple of weeks, and what are some kind of key things or actionables that maybe they need to be thinking about.
Yeah, and I think just that overall management philosophy, that culture-driven cost control um, uh, element of your business operation. Uh, there's some great resources out there. You're probably familiar with, and of course you guys do. You know these numbers from your clients and the people you work with. I know Chris, but the FinBin organization with the University of Minnesota, you can look at those benchmarking kind of numbers more broadly, and you can look at historical perspectives. Particularly, we look at corn as an example of those top producers of corn year after year after year. How do you get to be in the top 20% of corn growers in their terms of a financial performance every year? And one way they consistently do it is their cost of production is lower than everybody else.
Mm-hmm.
You may do it on yield, you may do it on price, but year after year after year, they've got that cost of production down at a point that they can withstand these dips in the markets. They're not pretty, they're not fun, but by having that cost structure and control that lets you weather these to a much higher degree, and then that also puts you in a position that if the market does get a mini rally, doesn't have a big one, just a moderate rally of some sort, those are much more profitable to you if we've done a good job controlling our cost. So I think even though we're well into the season, a lot of those inputs are fixed and done. Still always be fine tuning our operations. That if we can just struggle through this one, it may be a thin one this time on that profit picture. But how can we position ourselves that we're going to come out of this one in a better cost structure than we were going in, and then combine that then with a marketing plan and program that can capture some opportunities. And I think it's not fun, but I think it does put us in a position to be better off moving down the road.
Mm-hmm. Yeah, I like that a lot. It has a lot to do, I think, too, with the time of year we're entering into now. Fungicides. There's still some insect pressure out there and some things, and growers are going to have to make some decisions on, do I spend money on this product or not? What's the price of corn? Doing the equation and making sure that we have a plan that makes economic sense for sure.
Right. Yep. Yep. Controlling that cost while protecting yield,
Mm-hmm.
and that we're not sacrificing that aspect of it, because that doesn't help you break even. Which is what we're striving to do, is
Right.
get that break even price per bushel, per pound, per head, whatever it is. Get that number down as best we can. You can do that, and that opens up a lot of marketing opportunities that we didn't know we had.
Right.
If we get that piece right, that's the foundation of a marketing plan right there.
Yeah, for sure. For those who have good crops coming, the best way to lower that cost of production is increase yield. And
There you go.
for those that keep getting 10 inches, I think you got to start working the insurance
Yeah.
scenario, be talking to your crop insurance agent and have a
Right.
plan and figure out, where is the revenue going to come from, so that we keep, that we stay in business and that we don't go backwards if at all possible. So,
Yeah, and I think that's a great point. Reassessing those tools year to year, and so many times when we make those plans for next year, and it's not too early to start thinking about that. When we might put in our crop insurance program, well, let's just do what we always done. Well, in today's world, that may not be the best choice.
right.
There's some other tools and options and policy choices that we have that we didn't have just a few years ago. Some enhancements that can really put that safety net profile that you can create with crop insurance specifically is so important. And if this is a year to learn that and learn from that, then that'll put us in a better stead going down the road.
Mm-hmm. Yeah, for sure. And I think, the new farm program, and we'll have Paul Neefer on here and we'll be talking about some of the things, but it sounds like there's some enhanced um, payment, or a little bit more subsidy on some of these products and stuff
Yeah.
coming, which is going to make it a little bit more attractive to keep those higher levels of coverage in place and that kind of thing.
Mm-hmm.
But Hey, Mark, I think this has been a great conversation. This has kind of been a 30,000-foot view, but I think when the markets are down here, we got to step back, get out of the forest, get up in the air, look down at the operation and say, okay, what can we do here? And really look at it from that 30,000-foot view. And I think you've done a great job of kind of mapping some things out, things for us to consider, and really appreciate it.
Well, thank you, Chris. And again, sometimes it's just, managed from a tough place. And that's kind of where we found ourselves in many instances. It's even worse for those folks that are struggling with what a crop's going to look like this year. If you got, some of the best crops you've ever had, yeah, maybe eases some of that revenue concern. But we know that's not everybody everywhere.
Yep.
And make the best we can from where we're at. Let's get in a better position to handle these challenges down the road.
Yeah, I think it's easy to look away from the markets right now too, but I think we still kind of
Yep.
got to look at them. So even though they're ugly, we need to pay attention.
That's right. You still got to pay attention.
Yeah, sounds good. Well, hey, Mark, really appreciate it. Thank you very much, and we'd like to thank everybody for listening. Again, go in and check out TEPAP. That's a great opportunity for you to improve and enhance your business. With that said, we'll catch you all again next time on the Ag View Pitch.